And this is the news that we're tracking at this hour. The Monetary Policy Committee of the Central Bank of Nigeria has increased the monetary policy rate, which sets the benchmark for interest rates from 26.75% to 27.25%, surpassing analysts and economists' expectations. CBN Governor Olayemi Cardoso announced the 50 basis point hike during a press conference on Tuesday, following the committee's 297th meeting in Abuja. New Central's business correspondent Perpetua Fasanmi-Peter interviewed analysts to gather their perspectives on the decision.
Raise the MPR by 50 basis points to 27.25%.
This announcement was a shock to many analysts and economists.
I think, what the market was expecting was a flat, change in the policy rate. But this that has happened is a surprise, to the market.
Continuing to raise hike rates, it's got to stop, because whilst you are doing that, first, you are not reducing money supply. And secondly, like you said, we are affecting businesses. Cost of borrowing is going to go up regardless of what you do. As soon as you hike rates, cost of borrowing will go up.
Though the rate hike may pose challenges for local businesses and production, it can also attract foreign investors seeking higher yields, especially as central banks in the US and UK ease policies.
You will find that Nigeria is now a more compelling market for those investments coming from abroad to look for higher yield on investment instruments. And that, to my mind, should support the stability and possibly the appreciation of our exchange rate. When a country understands how to make the best use of foreign portfolio investments, you can sustain those investments over a medium to long term in your economy, and they continue to help you to stabilize your currency.
Analysts unanimously argue that addressing Nigeria's inflation crisis requires a more structural approach beyond simply cutting interest rates.
Where hopefully, if we get it right with the introduction of Dangote into the picture with regards to refined petroleum products, we should see a significant reduction in the demand pressures on the dollar. So this is completely outside of the NPR thing and all of that. This is just something that we're talking about the exchange rate, and if we get that right, then we should see a reduction in inflation.
Well, I think two numbers come to mind for me when we talk about exchange rates. Number one is $7.3 billion. That is the amount that government officials have said that Nigeria will be able to save when we sell our crude oil in Naira to local refiners. A more compelling number for us to save on an annual basis going forward looks to me like that $20 billion, assuming that we can completely eliminate all form of oil-related importation. I think that will be more instructive and more supportive of our FX rate stability going forward.
The 297th meeting of the MPC also saw the committee hike MPR by 50 basis points to 27.25%, retain the asymmetric corridor around the MPR at plus 500 to minus 100, raise the cash reserve ratio of deposit money banks to 50% and that of merchant banks by 200 basis points to 16%. However, it retained the liquidity ratio at 30%. In Lagos, for News Central, I am Perpetua Fasanmi-Peter.